How's it going, everybody? This is Tim with Tim Trades, and I wanted to post a follow-up video to the one I posted on Sunday, as I was in an airport and now I'm home, so I can go a little bit more in depth and have better sound quality and tell you about the 9-10 reasons I have as to why I really love this trade setup for AAC. So here it is. This is the daily time frame for AAC or AAC Holdings. First, you'll notice the inverse head and shoulders. It's this 3 half circle pattern here, and the two shoulders are at $2 and the low being the head. And then you have what's called a neckline, and that's the $3 mark. The inverse head and shoulders is a bullish pattern, whereas a regular head and shoulders is a bearish pattern. So in this case, the neckline, which is what you look to break out, is also the resistance line for the ascending triangle I've highlighted in blue. So resistance line and support line. And this support line has held up really nicely lately, and especially in the near past and in the past few days, it's held up really nicely. So that's really good to see. Ascending triangles are also bullish patterns, and it's also coinciding with a broken downtrend. So if you zoom out, you have this clearly defined downtrend. In January, it made this low, and then it came up and made a new higher low. And when it did that, it broke this downtrend. So that's also a good sign that we could be seeing a trend reversal. Another thing I looked at while I was doing a little bit of research was the short interest. So the daily short sale volume today was 53%. The short percent of the float is 35%. That's really significant. And the days to cover, or the short interest ratio, is 13.6. So if you consider how many shares are shorted and look at the daily average volume of shares, it's going to take shorts, or the bears, 13 days to cover that short float. So that's a prime setup for a short squeeze. Couple that with this clearly defined $3 breakout level in a inverse head and shoulders and a ascending triangle. This is looking really, really good for a breakout, coupled with a short squeeze. And also another easy to see thing is this huge gap here. So it gapped down from 530 to 378. It was an earnings report back in October. And a lot of times when you see a breakout with a gap like this, it tends to want to just fill the gap. So that's what I think is eventually going to happen. Gaps get filled given the distance away from this breakout, and that there's only 2 days of price action between $3 and $4 in the recent past. I think we're going to see gap fill. So that's just another reason why I'm bullish, and why I'm really liking this trade setup. Another reason why is you got these clearly defined levels of support and resistance, and I'll get to those at the end of the video, but it just makes things really nice, really well defined. And as you can tell here, on the 20th, we have an earnings report coming up. But if you go back after this earnings report, fast forward a couple months, there's 3 insiders that started buying up shares. That's always a really good sign to see insiders buying their own shares. Obviously, they know more than we do, and it means they have confidence, and it means that they think the stock's going to go higher. Couple that with an upcoming earnings report, maybe that tells you something. I was just trading ticker symbol WFT for the same sort of trade setup. You have this ascending triangle. There was some insider buying, and look at the breakout that happened. So that's just an example. We'll go back to AAC. So you have the inverse head and shoulders, you have an ascending wedge, or ascending triangle rather, you have a broken downtrend, you have a gap waiting to be filled, you have a huge short position and a high short interest ratio. You have clearly defined levels for your profit targets, your loss targets, and to help you build a risk-reward profile. You have insider buying, you have upcoming earnings, and it's not just that you need a good earnings report. A lot of times with earnings, there'll be a nice run-up going into the earnings, and maybe that's all we need to break that $3 level. If not, if it wants to consolidate, continue to consolidate, because that's what this is. An ascending triangle is a consolidation pattern, and you can clearly see why it's consolidating this huge move to the downside. So if it wants to keep consolidating into the earnings report, then maybe the earnings report will be the one to let it break out over $3. And when it's so far oversold, it doesn't necessarily mean that you need a stellar earnings report to give it enough to break out. It may just mean that it doesn't have to be terrible, or maybe it is terrible but it's baked in and they're going to give some good guidance and that's all you need. Sometimes you don't need much from an earnings report if it's so far oversold, and I think that's the case here. So haven't done much research into the last quarter or what I would expect them to give for guidance, but purely technically, perhaps you don't even need to. And I'm going to be holding this one going into earnings if it comes to that. So going back to the risk reward and the profit targets and the loss targets to help you build that risk reward profile. So when I'm not holding any trading positions and I'm looking for a trade, I always build a risk reward profile for each trade to help me rack and stack them and see which one has the best risk reward profile. That's the trade I'm generally going to focus on and trade. So to me, I see a 10% to a 10 to a 44 to 116% risk reward, meaning I'm going to risk 10% to get a 44 to a 116% reward. So how did I determine that? So in this case, if you zoom in, you got this low from the other day at 250. Well, if price reaches 250 and doesn't hold, okay, well, one, it's making a new low, but now it's making a new low outside of this consolidation pattern below this upward trend line, and so that would be a signal that it's going to make a new low and it's breaking this pattern that I'm trading on. So this is the level I'm using, 249, because I always wait till I see a confirmation. And that's about 10% away from where I got in and about where it is now. So I'm risking 10%. Of course, if you are using a smaller position, you could always use a lower downside support level, and that would be $2.20. And there's even another one at 2, but I'm looking at 250 here. So 10%, Then you look to the upside. Okay, if it breaks this $3 resistance level, where is it going to next? Well, these gap levels tend to be, they become support and resistance levels. So this gap down will become your first resistance level. Some may say, what about 330, 335? Well, given how close it is to $3 and we're going into earnings, I think maybe this kind of a random number at 330 won't be a big player, and I think the first real big resistance level to look for would be $4. But I think given the gap and how gaps fill, I think we can look to the upside of the gap and look at, well, normally I would say where it gapped from, which would be 530 or 522, but given the nearby kind of clear level at 490 and $5, I think 490 and $5 would be kind of that first zone excuse me, where you would see resistance come in. If not, it would be this 520 to 530 range where it gapped down from. If that gets broken, then you have this $6 level from here. So some really nice, easy to see upside resistance levels to use as price targets. And each one starting at $4 going up to $6 would be 44 to 116%. So that's how I came up with the risk reward profile, and that's why I took the trade. It has 10 big reasons, 10 really nice reasons to make a really good bullish case for this trade, and we'll see how it goes. So that's the trade. Take it, leave it, make it your own. Give me some comments as to what you see in this trade, what you think is going to happen, and if I missed anything. And if you like my technical analysis, then follow my channel. I'll be coming out with more videos as I see trading opportunities, not just on the ones that I personally take, but also on all the opportunities that I can't take or don't have the time to take or the money to take, but I just want to get that idea out there. So feel free to follow my channel and leave a comment below. Thanks.